Welcome back for another top-notch video. This week, guys, we'll be talking about the week of the 26th of August through the 30th of August, last week of August, and what a month it was. A lot of volatility, a lot of stuff going on. We'll do our broad overview and then a general overview. As always, our channel is about the TSP / retirement accounts. So if you have TSP, that's going to be the CSI and F fund. If you are retirement Roth IRA brokerage accounts, we follow the ETFs IVV, VXF, EFA, and AGG. These are all the same. They equal the same pretty much for the most part, and they equal the S&P 500, the small caps, international markets, and of course bonds. We like to go through all these funds in a kind of a broad oversense, going through a couple websites. Then we do our own technical analysis, and then finally we give our allocation for the end of the week. And as always, if you guys have questions, go ahead and write those in the comments below. So we'll dig right into it. So the first thing we saw here, we're looking at the Grow My Thrift Savings Plan. That's the first thing he wanted to look at. Very good website. Check them out if you have some time. He looks at the S&P 500 or the C fund in a short-term, mid-term, and long-term basis. Some of the analysis he pulled up on is, like we said for the beginning of August, a lot of volatility here, guys. We're seeing a lot of resistance at the 2940 line, and we have not broke that yet. So we're not super confident with markets just yet, with just seeing all this volatility and not able to break the resistance line on the top or on the bottom here. We are seeing a little higher highs here, which is positive, but we want to be just cautious on the short-term basis to try and see if it can break that level. And finally, from a long-term basis, guys, this is the C fund from a yearly, 1-year daily perspective. So you have the 200-day moving average in blue, and the 50-day moving average in blue, and the 200-day moving average in red. As you can see, we have a lot of consolidation underneath that line. Like I said, where that resistance is, we'd like to see it puncture there, because that's also where the 50-day moving average is also sitting. So we'd like to see that happen for our S&P 500 or IVV ETF. Our indicators are now above that center line here, so that is good. We did pop positive here, so that's good. And our MACD is, our black line is finally above our red line again, but yet to be seen, kind of in a mixed market, guys. Very, very mixed for our TSP funds / Roth IRA funds. The S fund's not doing as well. As you can see, we punctured through here a number of times, and we have not reached the top here. Seeing kind of a lower low, lower high here, and a lower low, so that's kind of a downward sloping trend. Really hoping to see it break that, and that is on kind of a short-term basis for that. As you can see, results are a little bit more mixed here, not above the center line here for our RSI. Black did cross the red, so that's positive, but a lot lower on our Williams percentage R. And finally, the I fund, we are also consolidating way below that 50-day moving average. Okay, a lot of consolidation on the 200-day moving average, back and forth, all for the month of August. This one's even more mixed. The charts just go from good to bad to worse. This one is probably in the worst kind of setup right here. We have a 50-day moving average that's now sloping downward, so we want to be careful with that. And just, we want to play it cautious with this. As you can see, the RSI is not above the center line here, and we are above on the Williams percentage R, but this consolidation so low in the chart is concerning. That's basically what we had for the basically Grow My Thrift Savings Plan. Now we're going to move into TSP Talk. TSP Talk has some good charts. A guy named Tom does some commentary there, and they also display the percentages for the week. So as you can see, we had the percentages for the week, CSI and F fund. So basically with these funds, we had a big week, big week. We gained 2% in just this week alone. So a lot of stuff going on, quite different from last week. But as you can see, for the month, for the entire month, we were down quite a bit. Even with that 2% gain, we're still down 4% for the S fund, 1.5% in the C fund, and then a little more than 1.5% in the I fund. How does that look on a weekly chart perspective? So this is what our numbers look like. So on a chart weekly perspective for our 5 trading days, as you can see here, it is a lot of upward movement from especially our C and S fund and even our I fund, while the F fund and G fund were down there under 0.5%. Overall, guys, for the entire month, crazy month for us. Okay, so Tom does some commentary on the month. I just want you guys to see this chart And just take a look at this, guys. As a TSP trader that only has 2 trades a month, this is very difficult to navigate. Typically on Top Notch channel, we don't exercise our third move, which is into that G fund. And with all the volatility this month, we did end up using that and exercising that because there's just so much volatility in here. From the very start of the month to the very end of the month, it was just a heck of a seesaw all the way through. We are towards the upper end of our channel here, but we would really like to see it puncture above this 50-day moving average and stay above it for us to move back into TSP funds. In the meantime, we'll wait to see what markets do. This is consolidating down just a little bit. Did hit this 200-day moving average a number of times. Did hit the 50-day moving average a number of times. It's anyone's guess to see where it will bounce out, more towards the top, more towards the bottom. On our technical analysis coming up in just a few minutes, we'll kind of show our probabilities of where we think things could go based off of that, and we will move in the future based off probability. This chart displays basically the entire month of August. Okay, so this is starting the very 1st of August. As you can see, we had quite a plunge in the beginning of August, and then like the chart here with all these ups and downs on a chart perspective, funds up and down, up and down. A lot of big moves in here, a lot of volatility, up and down, but we ended the month down, as you can see, with the all funds kind of being below, especially with that the C fund or whatever being quite low. So not much we could do there, guys. Unfortunately, that's just the way some months go. The good news is on the Top Notch channel, we ended up making 1.78% for the month, okay, and we are currently sitting up 17.5% up for the month or for the year, okay. So we did get a positive month in, and we are we're sitting very well. Now, based off of this month, we basically outperformed the entire month. We outperformed the I fund, the S fund, C fund, a little bit behind the F fund and the G fund. So we outperformed almost every single fund for the month of August. So we did very well on the TSP channel for the month of August. Very happy with that. Even with executing all 3 moves, we were able to come out with a positive month. Felt pretty good about that. No issues, concerns. As far as for the year, we are outperforming all funds except for that C fund. I said we're at 17.5% for us. Only fund that's above us is the C fund, and that just happened to rocket up in the last 2 days there and got above our percentage. So also doing very well for where we're sitting at. We're right between the C and S funds for the Top Notch channel. So very interesting, like I mentioned, very volatile week. Glad that we outperformed most funds for the month. And then finally, this was basically our chart for showing basically what happened since we made our move on the 22nd. As you can see, we made our move, and then charts fell down significantly, and we didn't have any. We were in our third move, so we couldn't transition back into the funds because we made our third move for the month. We were kind of at the mercy of the markets, and as you can see, it wasn't a terrible move. If we move back into the C in the beginning of September and charts stay around this percentage, didn't do that bad. Overall, the S fund didn't even get back to the 0 line. C fund made it a little bit above that, but for the most part, we did pretty well. That being said, guys, we're going to move into our technical analysis. The first thing we always start with is IYY. This is a very general market fund. Shows all stocks, all funds, professionals, unprofessionals, mom and pop, everybody, lottie-dottie in the markets. We do this to kind of get a general idea of what other people are doing, and we compare it on our technical charts. So as you can see, markets are moving higher. We have this trend line here. We have sort of violated that a few times, but it's held pretty well, guys. Going forward, yet to be seen. We are in the middle of all these lines here, so that is concerning. Not down below the 200-day, and we're not down below this critical mass line here. So upward sloping trend line, but yet to be seen. We'd love to get it above these moving average, especially above that 50-day moving average before we move back into stock funds. On a weekly, 2-day, and 4-hour scale, which is basically long-term, mid-term, and short-term basis. On our long-term basis for IYY, or general market fund, for everything, you can see that we are still very negative with our oscillator. Our PPO line is below our moving average still, and we're seeing a lot of we saw some downward pull here for the last couple weeks in August, and then we had a big spinning top here for this week. On a midterm basis, we are almost above there, but like I said, we would like to see this line cross before we start to put and allocate funds into our stock funds. So we're waiting for that to cross, that PPO line to cross, so we're waiting for our oscillator to turn positive. A lot of volatility in here, and then basically on a short-term basis, we are already positive here, good things. We just don't want to see this roll over. If we see this roll over and we're still negative on our weekly chart, we probably will not invest. So we're waiting on that. We're just being patient. Biggest thing is to be patient. We're okay with losing a percentage or two because we're already up 17% this year, guys, which is incredible. That is, the markets usually average about 8%, so being up 17%, we're very, very happy with that. If you guys remember last year, Top Notch Channel was up almost 12% in September, and after for not being cautious, we ended up losing all of that based off because we just let it sit in the markets and just let markets do what markets do. And so we want to be very cautious about just letting things sit. We want to be cautious what we made this year. We worked hard for it. We don't want to lose it. So that is IYY, and now we're moving into our stock fund, so IVV or the C fund. As you can see, a lot of volatility in here. Still not above that 50-day moving average. We want to see that increase, but overall, this is probably one of the better looking funds that we have out of our stock funds on a time frame basis, short, mid, and short, mid and short-term basis for IVV or the C fund. As you can see on a weekly scale, still down here. We did see a big spinning top here, so that's a positive sign. Wait and see what happens next week. Hopefully we get some little energy, or we get the blue on this chart here. On this chart here, hopefully we get the oscillator to move back up in a positive manner, and we start to see this line the PPO line start to slope back up towards our moving average. On a midterm basis or 2-day scale, we are almost out of the woods here. Need a little bit more of a conviction or a probability percentage before we start to invest back into the C fund. Hopefully to see that in the first couple trading days. And on our 4-hour scale, we are up and above that, so very good here, healthy markets, but we do not want to see anything like this start to decrease just a little bit so we don't get a little plunge here. This was last week. So we're just waiting on that. And as you can see, we kind of scaled out here on the 22nd, had that plunge, and then we weren't allowed to get back into markets because we only have 2 moves per month. And then markets were even a little higher than they were when we got out. So that's very interesting for that C fund. So that's the C fund, IVV. Any questions, please write them in the comments below. Moving on to the S fund. S fund, VXF. VXF has been hitting that 200-day moving average quite significantly. We are at a very critical point here. Our 20-day moving average is below our 50-day moving average. Okay, we are way lower here. We consolidated quite a bit here. We have our trend line that's been holding since 2019 here. We need to see charts bounce off this line and move higher in order to invest in this fund. So that I would say give it 2 weeks and see where we're at. But we need to see something happen with this. This is a lot of consolidation. A lot of consolidation here. A lot of consolidation here, guys. We've had consolidation here now all the way since the beginning of February. Mid-February. Mid-February, we've been consolidating for that entire time. If you see this line here, mid-February all the way till today, it's been consolidating. Usually when charts consolidate this much, we get a move, big move, either one direction or the other. We base probabilities off of what we see. So what do we see on a long-term basis? It doesn't look very good. We are in the negative with that oscillator. Our PPO line is low. No indecision line here. A lot of downward kangaroo tails. You definitely want to stay out of this fund for a little while and wait and see what happens with it. I don't know when this turnaround will happen, but we are concerned here on the Top Notch channel about the S fund. So we're going to wait on that on a midterm basis. Seeing it sloping up a little bit here, but the blue line is still below our red line, or the PPO line is below a moving average. Our oscillator is still negative, coming out of the woods here, hopefully. And on a 4-hour scale, we are up, just like we are with the C fund. Did see a little bit of negative action on the top, price-wise, on Friday. We're hoping for a move forward to keep this afloat, but we'll have to wait and see. Like I said, if we get something like this, we could see another plunge down. If we go below those moving averages, charts could move very, very quickly. So we are willing to sacrifice a percent or two at 17% just to wait and see, get a clearer picture on markets. to see where things go. Not that news events are super huge, but keep in mind that when you guys be watching this video tomorrow, that the tariffs go in effect this evening. I didn't see anything about a delay in tariffs, so there will be a tariff increase this evening. We'll have to wait and see how markets react to that. It's over the weekend, so the impact might be a little bit less, but that is something to consider. Moving on to EFA, or the I fund. This is one of our least looking best, or one of the most worst charts we have so far on our TSP fund / Roth IRA 401k account funds. This fund has slid in the beginning of August, a lot of consolidation, but the consolidation has been below the 200-day moving average. Big difference here, 50-day coming down. If it hits that line, some people call that a death cross. Want to be really, really cautious when that is below that. Our 200-day moving average is starting to slope downward here. We do have a trend line drawn in here, but lots of room to move down. Lots of resistance right here on the top. On a technical perspective, from a long, mid, and short-term basis for EFA or the I fund, we did see it top here, so that is a positive sign. We went from 6.78 on our oscillator to 6.58, so that is positive. That is a very good sign, something we like to see. We did see a cross here, but the thing that's so concerning about this fund is it's below the 200-day moving average. Barely saw any negative action here, almost had a weekly fake out. Would like to see basically at least a week more worth of action, or I would really like to see it get above this 200-day moving average before we start to invest. We should see a big increase here for EFA before we start to put any funds into the market here. But from a technical perspective, looks a little better than I thought, especially with that coming out. But we would like to give that about another week or so just to see where that goes. 2 positive weeks down here at the bottom. We're inside the Bollinger Band, so we're on some good terms there, but I just don't like that it's consolidating all below the 200-day moving average. The other 2 funds consolidated above. This one consolidated below. All right, finally moving on to AGG and bonds. Okay, so AGG, the F fund bonds, has been extended for quite some time. We have the moving averages in a very, very healthy. We have the predicament. We have the 20-day, 50-day fastest moving average on top. So that 20-day on top, then the 50-day, and then the 200-day, all sloping up in an upward fashion. So this basically favors bonds. We don't have any trend lines drawn in here, so that's a little bit of a concern. We don't know how far that we could fall. But so far, bonds have done very well, or AGG, for the past couple months. AGG on a short-term or long-term, mid-term, and short-term basis have done well. We had a weekly fake-out here. Okay, typically weekly fake-outs can last anywhere from 3 to 5 bars. So we got 1, 2, 3, 4, 5. We could see a final week here for our weekly long-term basis for AGG. On a mid-term basis, we are starting to see that decrease, and I said we were at our 5th bar, or towards the end of that rally there on a weekly basis, and as this is kind of showing some support for that as we move down on our mid-term basis, or the 2-day chart. Blue line still above the red line, but this decrease is kind of showing us a thing to come. And then finally, on a 4-hour scale or short-term basis, our blue line is below the red line here, and we are decreasing quite a bit here. So it would have been good to probably invest at the beginning of the month. We did. We were invested a little bit in AGG, and then we decided to move back into stock funds. Took advantage of a little bit of that up and down movement, but overall, AGG did very, very well for the month of August. It performed about at 2%, so that's very good. But moving into September, I would just be cautious. Like I said, I want to see some more, I want to see some more bars and some more prove it to me market action on our technicals before we get invested with some of our in some of our stock funds. So we're holding steady right now, and I can show you that. One last thing I want to show you is basically this is kind of some different markets and what happened. Now, we look to history just to kind of see where things are. It doesn't mean it's going to predict the future. But in these 4 cases here, and this is from the CCM market model, so you can go ahead and check out their YouTube channel. We had the 1987 case, the 1999, 2011, 2016, all very bullish cases for stocks moving forward with the moving averages. As you can see from 1998, we were in the moving averages, and then we moved, kind of did a retest and then bounced out. Same here, we were in the moving average, we bounced below, tested and then moved out. Again, bounced below and moved out. Bounced below, tested and moved out. Here we are, we bounced below, tested, and now we are in the middle of our moving averages. We could see something. The only thing this looks really similar to is that 1987 case where we moved back into the moving averages. But guys, we need to see this move out of the moving averages to be healthy and get back into our stock funds. This is what we like to call a mixed look, not concerning, but just mixed. We don't want to see it drop any lower. I think September will be a really good month to see, hopefully not get all this volatility, hopefully see either this push above or push below to give us a clear signal on what we need to do moving forward. This is the look we want to see. This is the look we want to see. This is the look we want to kind of avoid, or the look we want to kind of avoid here below the moving averages. So once we get that, I think we'll be moving. I think at this point it's probably good to show you guys where we're based off of. So as you can see, we are currently sitting in that G fund right now for the TSP folks. This one basically is just kind of, if you're in a Roth IRA or 401k, that's just basically holding cash. We are waiting for a more clear signal. As like I said, we're kind of in mixed markets, and we're willing to wait because we've already gained that 17% already for this year. That is extremely good. We don't want to lose that. We're okay with losing 1% or 2% to see a clear signal moving forward. Now, with new funds, since we are kind of down for the month of August, we want to capitalize on that. So we are putting new funds into the, I should have put the C and S fund. So we are putting some into the C and S fund, or IVV and VXF. We're at a 50-50 allocation. The reason we did that is because we're taking advantage of that 4% drop that we had in August for the S fund and a 2% drop overall for the C fund. So, and I can show that to you again. So for the month, we were down almost 1.5% here and 4% here. So putting that new funds in there, we are getting a little bit of better stock buy, a little bit of a discount on some of those funds for the month of August when those new September monies come in. Other than that, guys, that's about everything I had. As always, if you really appreciate your guys' support, please like, subscribe, or share the video. If you have comments, write those below. And that's another top-notch video. We'll see you guys next time.